What's up, everybody? Eric here. Welcome back to the Outlier podcast, where we talk all things abnormal. I'm here with David Pere from Military to Millionaire. I was actually connecting with him not too long ago for another conversation on his podcast, but it's great to have you on, dude. Thanks for hanging out.
Yeah, man. Thanks for having me.
Well, I'm stoked that we got through the marriage counseling session up first. So for those that don't know, we spent like 15 minutes talking about marriage, learning a lot. But I also wanted to thank you for sponsoring this podcast.
Oh, yeah, of course. How how do I do that?
Oh, well, I don't know. Your assistant said that there might be some sort of transaction of lewd photos afterwards as payment that
Oh,
I can get out on the
yeah,
secondary
that's not.
market.
I don't know if we've ever had that counted as sponsorship. I just assume that's
Huh.
it's like a goodie bag I send everyone,
Yeah, that's what it was. Okay,
solicited or not.
I misunderstood. Yeah, I guess I was just gonna scalp the pictures though, get them out there. But okay,
Yeah.
dude, it's honestly great to connect. So for those in my audience, just so you get like a really quick background, most of them are traders, options traders, right? The world that I talk about. But
Yeah.
one of the goals of the podcast that I do here is I really try to pull in people from different backgrounds to give people different tools that they can integrate into their toolkit, right? Sometimes there are different things that make sense. And like when we talked on yours, you know me, I'm not just a trader. Like I do have commercial real estate. I do have angel investments. I absolutely have my hand in a lot of different buckets because I think it works. So that aside, now you understand kind of the general people that we're talking to, just so you know the technical depth to get into. Talk to me a little bit about why real estate for you.
I don't know that I actually thought through a why real estate when I first started so much as um when I was going on recruiting duty, I was like, dude, I should buy a house. And then my real estate agent at the time was like not super helpful. And, my boss, when I checked into recruiting, was like, you're too busy for that shit. You know, don't worry about it. We'll figure it out some other time, but just go get yourself somewhere to live. And so I went and just rented something. I tapped out. And then, like, probably 2 years later, someone handed me the book Rich Dad Poor Dad. And I was like, dude, I don't like to read. He's like, here's a CD of it. Listen to it while you drive. I was like, oh shit, you got me. So I was driving around, recruiting kids. I'd go to high school and go to another high school. I'd probably drive an hour and a half, 2 hours a day. So I listened to that thing in like one week. And just the ideas that he talks about with basic, like, essentially like slowly building a passive income portfolio until it replaces, what you're making. I was like, well, that's cool. I don't necessarily enjoy recruiting. I'd like to be done with this at some point. And, he talked about real estate, but he talked about a lot of other things too. And real estate was just the one that I'd already kind of thought about. It kind of made sense. It's not nearly as like scary as some of the other stuff. And so I just kind of fell into the Rich Dad or I read some more of the like Rich Dad, like Purple Library series. And then I stumbled into Bigger Pockets. And Bigger Pockets is all real estate and they make it seem really simple and targeted beginners. And I was like, I can do this. So I bought my apartment lease was coming up. I bought a duplex, lived in one side, rented the other side. And it slashed my living expenses by like $500 a month. And then when I moved out, it was paying me. And it was just kind of like, oh, this is really cool. And I'm going to keep doing it. And so it wasn't like I don't think it was like a strategic thing so much as I tried it. It didn't hate me. And then I was like, oh, this worked. Let's do more of this. And then over time, I mean, now I'm at a spot where I'm like, I love real estate for a lot of reasons, but the main ones are like, I can pull people together and be in on a deal with very little time out of pocket, very little capital out of pocket, and just get a return. And it just slowly builds over time to where I'm getting more money. And then even if the property breaks even for a couple of years and then I sell it, there's a windfall. So I just bought a duplex 3 weeks ago and I was out of pocket $3,200 and I'm not managing it. And I've got probably 12,000 in equity, 15,000 in equity in it. And I think it appraised at 105. I bought it at 85 and then, $3,200. So whatever. I just read it for $1,250. So I'm like, that was easy. Cool. A friend of mine's managing it. So it's just, I think for me now, it's just like deals kind of come my way and I'm able to take them down without a whole lot of effort or capital. So it's just makes sense. I get smaller pieces of a lot of deals. And then, but I've also done a ton with like creative financing. So, I mean, I bought a property 0 down, no interest due, no payments for 12 months. And I flipped it and sold it and paid the guy out of the sales price. Um, And so I think I've just always liked the fact that, like, with trading, you at least need some of that capital. Even with options trading, you need something. But when I first looked at stocks, I was like, I don't have any money. So this is not going to be something that's going to grow because I got nothing. Oh, wait, you'll give me a $80,000 house for, 3 grand? That's cool. I can make that work. And so that was kind of what made sense to me, I think.
Well, you bring up a good point with the leverage aspect of real estate, and it's also there is like an intrinsic value component to it. Yeah, you can argue your stock holdings and whatnot still have some level of intrinsic value, but a house is a house. Like there absolutely is intrinsic value there. Now, a quick side note: I live in San Diego, as we've talked about, and you said that you bought a house for like 85 grand. God, where the fuck is that? Because I literally don't think you could get an empty garage for that here.
Yeah, probably not. No, this is all in Southwest Missouri. And that was 2000. Well, I guess that was not. So the first duplex I bought 79.9, and that was in 2015. But I did buy that duplex for 85, last month. Now, granted, actually, it might have technically been the last day of February, so I might be lying. It might be, no, we're still in March. Yeah, last month. Somewhere in there. Whatever. Doesn't matter. Not really important if it was 3 weeks or 4 weeks ago. But
I'm actually really hung up on that detail now, though.
yeah, well, I'll find you a closing date and give you a head statement. That was literally a friend of mine called and was like, "Yo, I was gonna list this property, but my lender, it's a private lender, needs his money back by this date. I'm not gonna have it done by that date. There's no way it'll sell. Can you close?" And I was like, "Yeah." And then, oh, I'll say it. So we agreed at 85. And I was like, write the contract for 100, and then somewhere in there, I'm going to find $15,000 worth of things that are wrong with it, and you're going to give me a seller credit for 15,000. And then my bank goes 85% loan to value. So magically, I had 15,000 in seller credits. That was the down payment, and so I'm in for the closing costs. I don't necessarily think that's the way you should do it with everything, but hey, if you've got a good relationship with the seller and they're willing to kind of play the game, you can kind of just manufacture a closing. So that's what we did.
I mean, it's logical as far as I can tell, and it's most of the better deals in real estate that I've experienced have actually come across more like that, especially the liquidity aspect. I find that if you can find opportunities to provide liquidity for somebody, you can typically get in at a much better price. Now, specifically for the Missouri place, though, where you're not too close to that, are you?
I am in Springfield. Yeah. So no, I will say that $85,000 duplex is not in Springfield, Missouri. You probably wouldn't find one that's inhabitable for that here. Uh, it's about an hour ish northwest, west by
Okay.
northwest,
So
whatever. Nevada, Missouri, um, which is a podunk town. But my buddy happens to work in the Social Security office there, and he owns probably 25 or 30 properties there. And so he's got a mix of residential, commercial. We have 5 tax liens that we bought there in August. So if they don't, knock on wood, if they don't pay us out, we'll have 5 houses in August that we bought for 16 grand off tax liens. Um, and so if they do pay us back, we get 8% interest, 10% interest on the money that we put out for the tax lien. So like worst case scenario, we either get 10% interest or we get a house. Um, and so I'm slowly kind of building a portfolio there solely because a really good friend of mine does property management, so he'll handle that and already had properties there. So I'm like, yeah, why not?
So you kind of preempted part of my question, and it's something that I actually tried to talk to people about because it's really tricky without a network, as far as I can tell. Because some of the things that I've acquired are nowhere near me, so that's not easy to do, though. So when you're thinking about acquiring properties, let's say you didn't have a friend there, and you found a place, you're searching online and you found a place that looks to be decent value, you do your homework, it looks like something you might want to get into, it's nowhere near you. How do you approach that kind of deal?
Yeah, I guess just as a credibility play, I'll say that I bought that first duplex in Springfield, Missouri. Then I got stationed in Hawaii, and from there Pendleton. And when I got out of the military from Pendleton, so that's for those who don't know California. So I went to Hawaii, and then I went to California for 5 years. And when I left California, I was out of the military, and I had 116 doors personally in Springfield. So there's 114 doors, which is probably like 25 properties, because there was 2 apartments and a hotel in there. Probably like 25 properties that I had purchased while living out of state, not being here. And I really didn't have that strong of a network here then. Because I mean, you think about it, that was my second property, my third property, my fourth property. Like I didn't even have a Facebook yet, or a Facebook group, you know? And really what I did is I had a really good property manager, and I had a relationship with a bank, and I was like, I'll figure everything else out. So my second purchase was 10% seller carry, 85% bank, and I had to put 5% down on a 10-unit apartment. And I handed it to my property manager and was like, call me if you need me. And that was from Hawaii. I had never seen it until like 8 months after we bought it. And then a third property was a duplex. And that one, I guess, kind of was a relationship thing. My ex-wife worked at a high school, and it was the football coach. And he had just kind of in passing, we had talked about real estate at one point. And when he got a letter from me, he was like, oh, I know this guy. Like, that's, Kim's husband. So, um, kind of was open to a conversation, and that one just kind of happened. Like, I don't know if he mispriced or if it was because of COVID. I mean, he priced that thing at, I think I bought it at 88,000. It was a pretty nice duplex. I mean, it was nicer than the one I'd bought for 79.9 2 years prior. So, and it was worth more than that. I mean, to put in perspective, I bought it for, I don't actually remember. I think it was like 88, and I sold it for 1 year and 1 day later, so I didn't have to pay short-term capital gains, for 140. And so, and I didn't do anything to it maintenance wise. I mean, it was like routine, touch ups, but the same tenants were in it that I sold it that were in it when I bought it. So now it's probably
So
worth
then,
180.
so then pulling on that thread a little bit more, if you're looking for opportunities to invest in, you shop around locally, you don't necessarily see anything that's speaking to you, what's the next step in your mind?
I would say you find a market that meets your criteria, and people get really hung up on that. But I would just say you set some basic criteria. Easy
Right.
ones are, does average rent equal at least 1% of average purchase price? Because that's probably around where you want to be, if not better. So you want to look at like your rent price ratio. Um, I would look at tenant landlord laws. So I would stay red state. And that's not a political statement. There's one kind of voting that hates tenants and says you have no rights. And there's another kind of voting that loves tenants and says they have all the rights. I'm not arguing which one's right. I'm just arguing which one you want to be on the side of as a landlord. And you don't want to be on the side of California, which is, yeah. So this guy moved in and they have squatters' rights. What are squatters' rights? Why do squatters have rights? This is a thing, huh? Okay, cool. Ironically, I have not tested this theory, but my gut says if you moved into Sacramento, into the Capitol building, they'd probably kick you out. You probably wouldn't have squatters' rights then. So
No,
I'm
I'm
tempted.
moving in.
Now that I say that, I think we should go move in with Newsom.
I'm moving in. Of course.
Dude,
Why wouldn't we? That's such
it's
a
a
great
great
point.
idea.
We finally found a loophole because I love my house. It's got a nice view, but I still have to pay money for it. So maybe I don't do that and I go to the Capitol building.
I mean, what would they do? Like,
What would they do?
it'd be
I
such
have
bad
rights.
publicity for them to kick you out.
I have squatters' rights.
God, this is such a great. I'm going to make a
we,
YouTube video. This is such a great parody idea.
and really what we need to do is print out the rights and bring the rights with us so that they know that we have those. Yeah.
Roll in with a sleeping bag.
Where's my room?
They're like, bro, I know it's going to take 6 months for you to get me out of here. You don't have a lease? Yeah. Well, honestly, I'm totally, the next time someone calls me and they've got a problem and it's that someone moved into one of their houses and won't move out and never had a lease, I'm going to be like, bro, I know how you get your problem solved. You take your situation and you do exactly that to the governor's house, and he'll figure it out real fast. Or it'll be a great publicity stunt.
All of a sudden, not a problem. Yeah, not a problem anymore. Which is funny because the first house I bought out here, I ended up renting it, but I was super selective and I made sure it was military people that were going in
Yeah.
the house because, as you know, if there's an issue with those folks, you might not be able to go to the local municipality, but I can always find a commander who's not going to deal with that shit.
Yeah.
So that
Yep.
was exactly the roadmap for me. And
You
honestly,
call a super pissed off adjutant and you're like, "Hey bro,
yep,
you want to solve this, or should I piss off your boss for you?"
that's exact. Yep. And I mean, they're beautiful people, great couple. Like they had a kid, dog. It was like everything was great. But that was one thing to your point that I was actually very concerned with because out here that can be a problem. So we know that we're looking for average rent about 1% of sale value. We know that we want to be in a place that's generally landlord friendly. What other simple criteria would you apply?
Yeah. Man, I'm trying to think back to like my super macro micro market stuff. But I mean, like at a macro level, you want decent, yeah, rent price, you want decent landlord laws, you want population growth trending upward at least 1% over the last 10 years. You can go to citydata.com and pull all that. Um, I would look at like employment diversity, and I don't by any means mean DEI. I mean
Yep.
like manufacturing versus tech versus government versus military versus medical. Like, what's the breakdown of, you don't want to end up like Detroit where it was 90% automotive and then it wasn't, and now Detroit, it's on the up and up now, but for a long time, Detroit sucked. Um, and so like look at, I want to see like multiple different industries in that market. And then on a micro level, I'm looking just neighborhood by neighborhood, like crime, what class properties, um, it really, all of that stuff could probably be solved very quickly by getting into local Facebook groups for that market for investing, or hitting up like the local RIA, like Real Estate Investor Association, or even meetup.com. And just like you just network a little bit in Facebook groups or whatever. You can very quick, like if you were to go into a Springfield Facebook group and be like, "Hey, what part of town should I invest in?" Almost immediately, people are going to go, "Well, that depends. If you want crack houses, invest north of Sunshine. And if you don't want crack houses, invest south of Sunshine, preferably south of 60, because Sunshine 60 to Sunshine is good. And south of 60, you get into Nixa Republic, Ozark, which are, they've doubled in population in the last 12 years and they're doing incredible." And it's like, "Oh, all right, cool. Well, what kind of properties do I want?" And there's no right answer. Crack houses are great if you have no money and you have all kinds of time. You can buy them dirt cheap. People will give them to you low down, lease options, stellar finance, all the things, and you'll get a really good return on your rent. You're gonna have higher maintenance, higher tenant issues, higher vacancy, deal with a bunch of bullshit. But if you have time and no money, that's a great way to start. And then what happens is most people get to a place where they all of a sudden find themselves with money and no time, and they start selling the crack houses and moving south and buying more, decent property. So I would say, really just figuring out what neighborhoods are good. And you can go in and you can zip code different population stuff and figure out like where people are moving to, where people are moving from, um, crime maps and all that. I would really just want to know, if I buy this house, am I in a war zone? Because you don't want to be. And that would be the basic stuff. And then I would start interviewing property managers. And honestly, the property managers will be able to tell you very quickly, like what neighborhoods, occupancy expectations, rent expectations, and all of that. And they'll have recommendations for you. I know my property manager is one of very few who will actually touch like war zone north side properties, which has been great because I'll introduce friends to her, but she's also very upfront with me. Like I'll call her even now. I'm like, "Hey Jerry, do you like this neighborhood?" She's like, "Hell no." I'm like, "Okay, I'll stay away from that." I learned that lesson the hard way. Um, so I would start networking with real estate agents, local networking, like investment Facebook groups, property managers. And then I think the last piece of that puzzle would probably be the lenders looking for, you can go find a national bank or a hard money lender, but if you find a local, we call them portfolio lenders, where they hold all the loans in house, they make all the decisions at their level. And that's how you get like the really good banks. Like I've got a bank that'll do 15% loan to value on anything I buy. And um, they've done some pretty cool things for me over the years.
Well, I'm now realizing a giant gap in my portfolio is the crack house classification. So I'll need to revisit that.
No,
posting.
you have money and no time. Well, you have time too, but you've got the money. You can skip that step.
Yeah, but crack house, it's kind of nice. Like,
Yeah, I mean, I definitely never showed up at one of my properties with a shotgun because my property manager was like, he keeps running my girls off and he has the money to pay rent, but he just keeps scaring my girls and they're not going over there to collect rent this month. Would you mind having a conversation with this tenant? It's the only time I've ever had to like go and interact with a tenant. And I had a 12 gauge slung across my back and a 45 on my hip. And I was just like, hey, I just wanted to introduce myself. I'm the owner. I'm Dave. I still had like the full fade mustache. Like, I was like, I just got out of the Marine Corps last week. Property manager just wanted me to run through and say hi to everyone and make sure, everyone was tracking that like we're going to pay rent and we're not going to hassle. So thanks. And moved on. That was the
awesome.
only actual tenant I talked to. It was specifically him, but whatever. It worked. He paid rent.
Speaking of the previous grooming that you had, I am curious why you insist on being such a catfish online because you don't have the full beard, and
Oh,
here you do.
I actually just changed all of that. And I got to get new photos taken. I'm going to get new photos taken. But currently, you're right, because I am working with a very prominent YouTube guy who's kind of behind the scenes on most big YouTube channels. Works directly with Evan Carmichael, and he essentially farmed a whole bunch of stuff out to like study groups, and everybody's consensus was kind of like, we don't know what that guy does. And he started doing some analysis and was like, dude, all your best YouTube videos, like your top 12 videos, are all mustache. Even this one, where you still have a beard, the thumbnail is mustache. He's like, people view that and they think military dude. Currently, they don't know what you are. And I was like, that's actually a really interesting point. And my normal photo was like this, like bow tie suit. I got all fly for a conference and my buddy took some headshots. Great photos, great outfit, great whatever. But he was like, go ask a bunch of your friends if that's the real Dave or if t-shirt. And I was like, well, fuck, that's not the real Dave. And he's like, exactly. So let's get rid of that shit. He's like, if you want to go take a real photo of you doing like the mean mug, crossed arms, branded t-shirt, like current haircut, go for it. But until then, we're using this shit because people resonate with it. And I've already seen an uptick on almost all my YouTube stuff. So I'm like, all right, well, he knew what he was doing. So I'm
Well,
going to go get professional photos taken of current look, but I didn't have it. Like all my current photos that I have like this are like, looking off into the distance or like sunglasses on, or like they weren't taken with the intent of being a profile photo. So they're not like centered. Um,
I see. Well, it looks like I'm gonna have to talk to your guy, but I fear like when I do, he's just gonna tell me like, bro, you're just fucking ugly. So there's nothing we could do in these photos to help me. But I'm looking forward to see the uptick in your progression once you
that's
get
why
the
I
new
have a beard.
photos.
I'm hiding half my face. It's a
Yeah.
hack.
I mean, I'll be honest, like if that dude told me like the beard has to go, I'd be like, sorry, dog, you have to go. There's just no
Yeah.
fucking way.
Yeah,
Just how it
exactly.
is.
We had that conversation. He's
Yeah,
like,
good.
oh, he was like the mustache, and I was like, so can I just use the mustache from old days as thumbnails? Because I'm not shaving my fucking face. And he's
Now, I feel like if there was a way to talk you into like a sick handlebar mustache, I'm always trying to talk somebody into that because I don't want it, but I want to see it.
a full Fu
Yeah,
Manchu.
yeah. Like I'm thinking like a nice solid handlebar mustache would be sick.
The
Um,
mustache was my brand for like probably three, no, probably 4 or 5 years because I got promoted to yeah, I got promoted to staff sergeant at the end of 2016, and I had a mustache from that day. I got PRK like LASIK that day. Like
mhm.
I got promoted and then went and got LASIK or PRK. And while I was recovering, I grew the mustache. And when I had grown it out as like a lance corporal, a
Yeah,
deployment or corporal or something, and always somebody gave me shit. It was like this thing, first
as
sergeants
they
and sergeants,
should.
they would hunt me down. They'd be like,
Yep,
look, like, shave your face. And when
yep.
I got promoted to staff sergeant, I came back to the shop with it, and everyone's like, wow, that looks really good on you. And I'm like, all of a sudden, people like it. Okay,
Yeah,
I
you
always
vast.
liked it. So
Yeah. So that's very Marine Corps for you. I remember one of my gunnies, he was trying to get the dudes to like really cut their hair short. Like for whatever reason, he wanted them all to be cue balls. And I was always a standard second lieutenant, hair like right on the fucking cusp. of okay. And he would always ask me, like, when you cut your hair? I was just like, when it's out of regulations. And he's like, I think it is now. And I was just like, I don't think it is. So we literally had a ruler on my desk so that we could measure my fucking shit and be like, nah, man, this is still just under 3 inches. There's no fucking way. So
Yeah. Yeah. I
I
still
feel
had
like,
sergeants major that would tell me to shave my mustache, and I'd be like, it's in regs.
uh, well, I mean, just what a spot to be in life where like that's the priority for today. Your mustache. That's where we're at.
Well, you know how as much as I love the Marine Corps, you know how it is. If you run fast, you get to do everything you want. And if you don't run fast, you get to watch the people who run fast get to do everything they want. And that's really the only thing people care about. Like on the sergeant major side, it's like haircut, no mustache, run fast. Nothing else matters. And you're like, you know what is funny, is you're promoting guys that don't know their job, but don't they run fast. You're right. They're great people.
We're a simple people. You know this. We're a simple people.
Yeah.
So one of the questions I got from my audience for you specifically, and it's honestly to not insult you, it's not for you specifically, but it's for real estate in general, and they know you do real estate, which is current rate environment. A lot of people are turned off from just transactions right now because rates are high. What do you think about that notion, and how do you get around it?
I think people have been finding a reason to be turned off from real estate investing since I started. Like 2017, the market was going to crash. 2018, the market was going to crash. 2019, the market was way too high. 2020 was COVID. 21, you missed the boat. And 22, rates were going to go up again. 23, rates were up. Like, there's always going to be a reason not to invest. If you're looking for it, you'll find it. Sorry. Here's my take on it. If the property doesn't lose money right now, then it'll be fine when rates go down, and they're not gonna, like, I have a ceiling on my rates. So if it's okay now, higher inflationary environment, do we think that means lower rent in the future? I don't. I think that means higher rent in the future. So one of two things happens. Rates go down, I refi. Rates go up, I'm locked, and everything else goes up. Property value, rent, whatever. Now that the normally when rates go up, property values hold or dip, but they didn't dip at all. So my spidey senses tell me that when rates drop, which will eventually happen at some level, all these people who have been holding out might actually move. Because right now there's a lot of people locked into their, these incredible interest rates. Why would they ever lose it? But I think if rates drop and people have powder that are sitting on the side, I think we're going to see another pretty decent jump in property values, because property values have plateaued for like the last year and a half over rates, and inflation definitely hasn't gone away. So like they're either gonna stay there or they're gonna go up if rates drop. So I feel like all of that is true, but I mean, to really just boil it all down, I would rather pay more for a rate than pay more for a house. So do I like the environment of really low interest rates? Yeah, but I'd rather pay for current pricing with high rate and then be able to refi into a lower rate than pay potentially more just to have a lower rate. And you're like, well, what's the difference? Well, like the rate changes without affecting the property. Like if I buy a house for $100,000 and the rate's 9% and then the rate goes to 3%, I still bought that house for 100 grand. I'm not underwater. I'm okay. As long as I don't miss my mortgage payments, I'm fine. Even if rates go to 20%, totally fine. As long as I make my mortgage payments. But if I pay $150,000 for a house that's really only worth 100 just because I got a 3% interest rate, well, now I'm underwater for a long time and I'm stuck. And so, and there's a lot of other stuff to it too, like rates, puts like we're not in a buyer's market or a seller's market right now. So like people can't get their house to sell as quickly on the MLS, which provides a lot of other unique opportunities like, seller financing stuff. And there's all kinds of interesting ways to play that game. We just sold an apartment complex for probably 50,000 more than what we would have been able to sell it for, because we agreed to hold the note for 2 years. And we're arbitraging the debt. We're making 1,000, 1,200 bucks a month over our mortgage payment in what we're collecting, and it's interest only because the guy was going to be paying 9% interest to buy the property. And we were like, yo, dude, we've got a 6.55 interest rate locked on this thing. If you just want to give us that, interest only while you do all the renovations. You can just have the property for 2 years. And when you refi, just pay us out. And he's like, oh, okay, cool. And so we're collecting 6.55% interest on 800K when our original note was 650 at 6.55. So we're arbitraging that difference in 150 at 6.5%. And then in 2 years or within 2 years, he'll cut us a check for the 800K and he'll refinance into another, loan with debt or whatever. And so we're literally just paying our mortgage payment plus additional, and we have no control over the asset anymore, no tenants, no expenses, nothing. So it creates some interesting opportunities. There's
Yeah.
no way we would have been able to do like a 6.5% seller carry 3 years ago. People would have been like, you're a fucking idiot. Like, give me 0% interest. Now it's like 7% beats 9. So yeah.
Right. Yeah. Yeah. It's pretty awesome. I think two things. The first thing is I think you did a good job, really good job explaining the high rate environment, because what I try to explain to people is the basis doesn't adjust until another transaction. The interest rate is variable. Essentially, you can have different access to change your rates. So I think the way you described that was awesome.
Well, thank you.
But the other thing that you're highlighting here that is really cool, and one of the things I find interesting about real estate is it's very flexible. There are a million different ways you can cut even one single deal. It can be done a lot of different ways. When you think about your progression through real estate, what have been some of those more pivotal moments when you realize it's not this standard cookie cutter? I go through an agent, there's 3% commission on both sides, yada, 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 like just standard transaction. What are some of the things that you came across that you realize these are different ways you can do business in real estate that are a big factor for you? One of the things you mentioned already is, seller carry, stuff like that.
Yeah. Before I answer that, I want to just highlight, I love the fact that, like, with stocks, if you buy the wrong stock at the wrong price, kind of screwed. I mean, I don't know. Maybe there's a way to just hold it forever and hope it comes back, but like my knowledge of that is essentially
Terrible strategy.
like shit, let me get out of this thing. With
Mhm.
real estate, there's not a whole lot of mistakes that can't be overcome by just holding on to it for a longer period of time. So like, oh, I lost 20 grand on this flip. That's okay. Eventually the house will be worth more. As long as I'm not coming out of pocket every month to hold on to the thing, it'll be fine. It'll buff. And so I really like that. It's a very forgiving asset class as long as you're in a market that's not, plummeting. And even then, if you had bought your house in 2006 and still owned it, you'd be up no matter what the '08 to 14 slot looked like in your city. So if you hold it long enough, forgives a lot of stuff as long as you can pay the mortgage or your tenants can. Man, there's so much to answer your question. I mean, I did like a 12 call masterclass, quote unquote, on creative financing stuff to my mastermind. And it's like, there's the seller financing, then there's like reps, and then there's lease options. I mean, there's sub two, there's
If
assuming
you
loans.
if you
Um,
think about specifically for like a beginner intermediate level, if you were to pick like two or three of those that you think would be good starting points for them, what would that look like?
yeah, I love creative financing in general, right? So like seller financing is my favorite. And that's essentially having a conversation where and I do this a lot. Like my buddy Marty has the same car I do, and his just went in the shop for something that might be catastrophic. And I bought a Tesla. And so I was like, you want mine? Like, I'm thinking about getting rid of it. And I was like, it says it's blue booked at this. And he texted back, yeah, do you want to be the bank? And like, that's a normal conversation for us. Like, most people, I'd say I want 8,000 or 6,500, whatever. And they would say, okay, let me get a loan or let me pay you off in cash or whatever. And his immediate thought was, can I just make payments to you? Like, I'll pay a little more if I just make payments to you. And it's like, that's just a way of thinking, right? And so the number of houses, I probably bought 15, 20, 25 houses now where the bank was either not involved at the beginning or not involved at all because of just negotiating with sellers and just asking questions, hey, how much do you need to get out of this house today? Okay, I can put that down. If I put that down, what if I just make these payments for the next 10 years? And they're like, okay, or all kinds of crazy ways. So I would say learning about seller financing, and I'd say learning about like private money. So,
Hmm.
essentially the idea that I could be like, yo, Eric, I got this sick deal. Um, if I paid you 1 point and 10% interest, do you have 100K you want to stick somewhere for 6 months? I'll pay you back. And Eric might not because he gets a better return on his money. But there's a lot of people with money sitting in a savings account or the stock market or a bond or CD or self-directed IRA that would jump at that. And I even have other real estate investors. Real world example. I'm under contract on 14 single family houses with that same guy in Nevada. Um, he found the deal. He's operating the deal. He's managing the renovations on the deal. He needed $200,000 to make it happen. I pinged one friend. He said yes. I'm a 35% owner of this transaction. The friend who said yes doesn't want equity. He doesn't want to deal with a K1 like a tax return issue. He just wants monthly payments, whatever. So I was like, hey, can you do 24 months, pay you 1% upfront, 10% interest all on the back end? And he's like, yeah, cool. And so that dude is going to make, math in public, $22,000 on his 200K, guaranteed backed by the properties. He's going to be first position lien or no, yeah, first position lien. And then when we're done with all the renovations, we'll refinance, we'll pay him out, we'll have it on a bank loan, and we'll be into the property for effectively zero money out of pocket. Um, but costs us 22,000 in interest to do that, and good relationships. But I'd rather do that than put 200K in it myself. I've got other places to stash money. Um,
Let's
so
also
I think
leverage.
like the networking and learning about private money and seller financing are huge ways to change the game because you're not using a bank, you're not using credit, you don't have to abide by any of those rules. You can just, if you understand terms, you can literally do anything you want. And that's pretty powerful. Like I brought probably 15 houses in the last, well, between 2021 and 2022, I bought probably 15 houses that were all that we call them burrs, which is like you buy it, you rehab it, refinance, and then you rent it out and you do it again. Um, every single one of those was like, yo, Eric, I got this house. I'm gonna be all in for 85. You want to lend on it? Cool, thanks. Buy the property, renovate the property, call the bank. Yo, I got this house. Come appraise it. Bank comes out, they're like, it's worth 140. We'll give you 85% of that. Cool. Yo, here's your $95,000 back, Eric. Thanks for playing the game. You made 10 grand. Great. Oh, cool. I also get to pull 5,000 or 10,000 out of this property and I own it with no money left in it. Great. And it cash flows. Perfect. Um, so I love leveraging those things. Outside of that, I mean, I would probably just say, have a good property manager and try to find deals, uh, off the MLS if possible. Whether that's, I mean, I got one texted to me 5 minutes before we got here and I sent a few questions back and I don't know, I might buy it, I might not. A friend of mine has it under contract and isn't in a spot to take it down. So just,
You
yeah.
you highlight another really important point though that grows over time, which it's so annoying to say, but it like a network, dude. Like having people that are around doing these things is really important. And it's funny because I found even in my own experience that it starts off where you don't have any money, you don't know anybody with money, so you can't really do shit. Then all of a sudden, at least from my trajectory from trading, I started having capital, but I actually didn't know a lot of people with money, so I was still just kind of doing my own thing. And then you start slowly bumping into other people that have capital, and then exactly like you're talking about, those kinds of things start to emerge. And the reason why I make a point to say this is because a lot of people, they'll say like, oh, I can't find any deals like that, or I never run into those people. And what I try to remind them is it's like, you're not in an opportunity to yet then. Because if, David goes to somebody and be like, hey, I have, this deal on the hook. Do you want to play bank? And the person's like, oh, no, I can't this time. Okay, maybe David will earmark you for another deal, but that happens 2 or 3 more times. Like you're a dead end. There's nothing to
Yep.
happen here. You're not in a position to play the game. So we move on somewhere else. So I just bring that up because a lot of people, they resign themselves as if they can never bump into these opportunities. But the very first thing a person can control, in my opinion, is to get into a position that you can play in the opportunities. And then all of a sudden, they start popping up. Anyways.
Yeah. Yeah. Agents always call it like pocket listing.
Hmm.
But I mean, I would essentially, like, when I was wholesaling, I had a wholesaling company for probably 2.5 years. And towards the end of it, we were doing 4 transactions a month, all off market. We'd generally wholesale 2 or 3 and then flip one and hold one or whatever, however the math worked out. And, I literally had probably 6 guys that would get a text message. Hey, I got this property coming. I'm looking for this. Here's what I've got for, after repair value, renovations, do your own homework. Here's the link to the photos. 24 hours later, the other 1,200 investors on my email list would get it if none of them had bought it. And it was very common that never saw the email list. And, most of the big wholesalers I know have 5 or 10 like main buyers. And then after that, they go somewhere else. And you're like, well, that's not fair. Is it? Get a hold of the guy
How
and
is
be
it
like,
not?
yo, let me be on your main buyers list. I'll show you I'm worth it. And they're like, how? I'll buy a fucking property. You send me a deal, I'll buy the son of a bitch as long as it makes sense. Or I'll tell you what I need it to do in order to make sense. And you're right. If you do that like 4 times and you don't buy shit, all right, you can go sit in the email list. But if someone on that email list buys a property, buys another property, like, yo, you very quickly, you're on top of my list and you're going to get the deals before anyone else. And, whatever that looks like. Doesn't mean you have to buy everything that comes in front of you by any means. But if I don't believe you're going to close, or like if you fall out on a contract, I won't say you're dead to me, but you definitely aren't seeing things first.
Yeah, well, and it's a working relationship, right? It's like this. It's the same thing. If I do anything else, I'm gonna look for the people that are performing at the same level as I am, or maybe even a little bit higher, and get around those people. And so I think what you're highlighting there is kind of a really important point. Now, when you're looking at different properties, it sounds like you still do a lot of residential, but you mentioned some commercial in there as well. How do you view the two different asset classes? And just to couch that, some people, when they hear commercial, they, I sometimes think, forget that there's like an entire fucking umbrella under commercial. There's a million things under there. People will say, like, because they know I'm in Korean, they'll say stuff like, "Oh, well, isn't commercial going to collapse?" And it's like, what does that even mean? Like, what does that even mean? Like, all commercial real estate across the entire globe is just going to, like, no, dude, that's not how this works. Just as residential housing markets have pockets, right? Like California tends to do its own thing. So when you look between the different asset classes, and feel free to take the commercial side, whatever, path resonates with you, but how do you view the difference between those two, and how do you implement them in your portfolio?
Yeah, I'm kind of I always joke with people like I'm a buy and hold guy. And so like I was at a conference 2 weeks ago, they had a speaker dinner, and I'm at the speaker dinner and everyone's got like name tags. They made you put on a name tag and it was like put your name, put what you're at, put your asset class, right? And everyone's like so and so short-term rental, so and so midterm rental, short-term rental slash midterm rental slash flip slash whatever. And I just wrote Dave, all. And they were like, huh? I was like, all the above. They're like, what do you do? I'm like, dude, I've pretty much done everything, but I will pretty much buy and hold anything. I don't care if it's a short-term rental, I'm interested. If it's a long-term rental, I'm interested. I'm interested in residential assisted living. I don't own any yet. But to your question, currently, I think when I talk about my portfolio, I talk about things I have like a controlling interest in, or at least know my equity split. Like I actually invested in or did something to make that deal happen, rather than like I don't ever talk about it, but I've got like another 946. No, sorry. 146, 740. So
You can take your time. Math for Marines, we know how
yeah,
this goes. Yeah,
880. Yeah.
you could borrow my toes if you need.
I actually haven't done this since I closed the other one. So
Good.
plus 130 plus, yeah. So 1,016 units that I have a small ownership percentage in, whether that's like the two of those
Right.
apartment complexes is like 1/3%. And then one of the deals is like, I think my stake is like 5% total. All from like investor relations, bringing in investors, helping with marketing and all that. I don't count those when I'm talking about this. Like that's 1,000 doors and ultimately $80 million worth of real estate that I am on the operating team with, but I have no controlling it. Like I don't make decisions. I do on one of them, I guess, but you know what I mean. The rest are all like deals I finagled or directly impacted or I make the decisions on. And so with that, I've got currently like I sold a lot of residential. I've got 9 houses, some duplexes, one fourplex, some single families, one triplex. I've got a 28 pad RV park. I've got a 23 unit apartment, a 40 unit hotel. Um, and we're under contract on those 14 single family houses and a church. And so I'm a anywhere from a 33 to 100% owner in all of that. Um, and so I've kind of dabbled. We've looked at mobile home parks. I've sold some stuff. I sold another apartment, whatever. So, I mean, the biggest difference, right, is residential is usually more emotion driven and commercial assets are not. So you can very quickly come in and be like, this don't match. Like, sorry, that's not worth that. I did it to someone today. I got sent a really cool portfolio. It's 6 units that could be Airbnb. They're cabins on like a river that people kayak on. And I'm like, dude, that'd be sick to own cabins that I could literally like, I could leave my buddy Hugh's house, get in a kayak and float for like 2 days and end up at a house I own. Like that'd be
get to
sick.
your house. Yeah.
Yeah.
You just,
I'm like,
just get smashed kayaking all the way down. Yeah. That's perfect.
I'm like, it's rad. I want
Right.
750. And I'm like, all right, cool. So I go in, I'm like, send me the numbers. And they send me the numbers. And they're like, the best year in the last 3 years was 12,986 net operating income. And I'm like, bro, that's like a 2% cap rate.
Right.
We're not in fucking LA. Like, what are you doing? And they gave me a bunch of reasons, but ultimately I'm going to tell them like it's worth 400. It's not even worth that, but like I know what I can bring the income up to. Like you don't in commercial, it's like you don't get to be paid for money that is potential. That's work I'm going to do. I'm going to offer you based on what this is worth today. Take it or leave it. And there's not a whole lot of emotions in that, but like, the market can go crazy with residential stuff, which is good and bad because right now everybody's holding on. And so you can jump in on these things for 85K on a duplex. And then if the market goes up because people get emotional and start buying again, I'm like, oh boy, sure, I'll take 140 for that thing I bought for 85. Whereas the commercial side is like, I got to play with the expenses. I got to play with the rent. I got to play with whatever to change the value of it. There's a little bit of swing for market, but it's much more driven by what you actually produce with the property, which is a blessing and a curse, but I love it. Like most of the time you take over like a mom and pop property and it's very poorly managed and you can come in and prime example, we bought a hotel in December, 130 units, kind of a boutique, like 3 pools, wedding venue right outside the Smoky Mountains. It's pretty sick. Log cabin design, like really cool. Very poorly managed. We came in, we were like, wow, this thing's not on Booking, it's not on Expedia, it's not on Trulicity or Travelocity or any of the normal, like it's just on their website. It wasn't on Airbnb, VRBO. We turned everything on week 1 and we had to refund like 15 people because we overbooked rooms that weren't actually occupiable. And we're like, well, let's turn that back off. And, but I mean, here's a place that had been operating at like 30% occupancy, and we basically filled it the next week with just understanding the basics of marketing. Well, if you get everything operationally where it needs to be and you do that, you just effectively doubled or tripled the value of that property with a very few tweaks. And so that's one of the reasons I like commercial. Like the residential side, they'd be like, cool, you're bringing in more money. The neighborhood house down the road still sold for this much. So that's what it's worth. Commercial side, it's like, oh, you just added, $100 in net operating income can be 60,000 or whatever. And I forget the math, but it's like $100 is like 100 and or one, I think it's $1 equals 166 at a like 10 cap if value increase. So for every like $10, it's $1,600 in value, or for every, that extrapolates. So if I raise the 10,000, then I'm trying to do really hard math in public, but I think it's 10 grand a month net operating income, or 10 grand a year net operating income would be like 160,000 added to the property value. It's not hard to get that out of the right property.
Right. Well, it also sounds like a lot of the properties still that you deal with have tenants in some capacity. So
yeah, I'm not doing manufacturing stuff yet. I'd love to get into that and storage and whatever, but
storage is interesting. Actually, if you ever want to do anything in storage, let me know, because I'm new to that as well, but I'm interested in that also. But
one of my best friends has 12,000 storage units, but he's never needed money because the first one he bought, he did so well that I'm always like, hey, let me know when you're buying another. I'll raise with you and I'll be in on it. And he's like, yeah, yeah, cool. But I can just pull the money out of this one and buy it myself. So maybe next time. I'm like, damn it. He's like, he's crushing it.
What a bastard. Share. Whoever that
I
is,
know.
share with us.
I'm
We're
like,
all
you
trying to we're
just let me mooch.
yeah, dude, we're trying to get in on this too. Um, but like for storage units, I'm very interested in that. But for manufacturing, it's interesting because I've worked with some partners, and what I found for manufacturing is, in general, it's really low turnover, lower returns, but really long terms. It's like a fucking ship. They're very stable,
Yep.
and I was kind of getting a bit of an understanding on why that was. And like he actually took me for a walk around one of the properties, and it's like this specialized manufacturing arrangement. And like these guys have to set up everything how they want it. That is a massive bear. So
Yeah.
manufacturing's interesting, but probably a little less on my hit list. I would love to see what you do with it though.
We'll see. One of my buddies just built I think it's 100,000 square foot facility, maybe 120. I don't necessarily know, but he built I mean, he basically capitalized off COVID and built like they take like F550s and turn them into like million two, like $1.2 million like vans for like super, super well off, like baller all-wheel drive, dually
Yep.
fucking off-road vehicles. And then now I think he
All
started
over
doing
here.
boats and stuff. And he like started in his garage and now he's in his own like he's renting a shop. But yeah, they just built themselves a warehouse. I think they're about to open at his new plant. So he's the one that's like really got me thinking about it because he's like, I can build for $11 a square foot and I can rent for like the I don't remember the exact math, but he's like moving into that one and already planning on building two more to rent to someone else. So
Mm. That's actually really interesting, especially like the rate of change in the scale that he's going through there.
yeah.
We're coming up on time for you. I know you have other shit to do. A couple final questions. When you look at the real estate market, let's say for the next 18 months or so, something like that, what do you think? What does it look like?
Hmm. Um, it's a great question. There's a lot of really weird factors with like the lock-in syndrome where people aren't selling houses because why would they sell a 3% interest rate to move into a seven? So there's not a lot of people selling. Um, Supply and demand is off still because they have not caught up on building. So there's still a dramatic undercut of supply, which makes me feel pretty confident because it's hard to totally tank a market if people still need places to live and still want like more people want to buy than can. Um, I mean the interest rate game, like if they go too much higher and they hold it too much longer, I think we'll be seeing a full scale depression and or maybe not depression but dent per se in the economy, and then it won't really matter if real estate takes a little bit of a bump because it's not going to be like everything will. If they lower them, I think real estate's going to take off running again, and so it's kind of a weird game. I think honestly my assumption is that rates are probably the biggest deciding factor right now in what the market does, but I think we're kind of in a slow upward, and it's like if they drop rates that'll increase in speed and if they raise rates that'll slow in speed, but I don't see a real estate related massive crash in the next 18 months. Like everyone's calling for it, but they're thinking back to '08. I think if something tumbles, and I've been saying this for probably 2 years, if something tumbles, I don't think it's going to be led by real estate. I think it's either going to be led by banks, by the auto industry, by, consumer debt. I mean, there's a couple things that I think will default long before real estate does because, 60 or 70% of homeowners refinanced 21 to 22 and their debt is under 4%, if not under 3%. So it's really hard to imagine a world for me where Mr. Homeowner can't afford their 2.5, 2.25% interest rate home loan unless they got laid off, they got all this other debt that added up. Um, so that doesn't necessarily answer your question. I'm still fairly bullish on the real estate market as a whole, but I'm also thinking long term. Like I don't plan on selling most of the stuff in the next decade, so it doesn't matter.
Yeah.
Um,
Well, it does answer my question because the whole idea is we're taking a guess at the future, right? Nobody fucking knows. That's the whole
No.
point. So yeah, so the idea is just to see how you're thinking about it, and at least from a market perspective, we're definitely starting to get closer to cuts. The Fed is forecasting 3 cuts this year. There's only 4 opportunities left for them to do that. So the next cut opportunity, where the probability of a 25 basis point drop is in June, is over 50% chance right now based on the repo market. So we'll probably start to see some cuts towards the middle / end of summer is what I'm seeing, at least from the stock market perspective.
Yeah, I would imagine from just a societal standpoint that happens before the election, before the election, before the election, and then post election it goes back up. But that's just because I'm a schmuck who is convinced that I'm not going to say my exact quote on this thoughts while we're recording, but essentially politics is a doozy. So
yeah, well, I tell you what would be a doozy is if they cut and raised again. That I would take the under on that bet. I doubt they raise again, but I don't want to counter the first part of your bet because I think that's probably accurate.
Yeah. How do you get reelected? You fix the economy in the last 6 months.
All right, brother. Well, we'll wrap you up here. Where can people get a hold of you if they're interested? Really, I think if they're interested in like seeing how bad the catfish is, but if they also wanted to learn about real estate or whatever.
Well, if they just want to see the catfish, just go to YouTube for Military to Millionaire.
Go.
But the best place I tell people to connect is to go to thebestpodcastguest.com, and you can download my free book and find all my social media.
Me? I thought that would be me.
I bought the domain.
People to me?
Hey, it might be you, but I bought the domain. I did that to a friend the other day. I called him. I was like, "Hey, man, I just wanted you to know I believe in you so much that I bought your domain name." He's like, "What do you mean?" I was like, "I now own, first name, last name.com." He's like, "I hate you." I was like, "Merry Christmas."
It's absolutely awesome. I love that. Well, I'll throw links to that in the notes below for everybody so that they can successfully navigate over to you. But dude, it was great catching up. I'm looking forward to catching up with you next week when you're out here, and then we'll catch everybody later. See you guys.
Have a great one.